grandfather's 90, and he'll be 91 this year. And they're like very independent. They're financially set up. They're not a burden on their kids, and they're squared away, and financially and with their health. And we are like, that's our our model. Like, we want to be that. But on the flip side, we see it on the other side too, where we have relatives that are not, like, they're not prepared. And so what happens when they get to retirement age, or they have some sort of a medical issue, and a family member has to step in and fill in a gap there? Well, it's just real, but it's going to be a burden on that family, right? It's going to be a burden. And I know that sounds rough. It almost sounds harsh to say, oh, my family members are burden. Um, but realistically, it becomes a burden because, like, for my kids, I don't want them to be living their life with their family, and they have kids, and they're on this path, and they're, you know, making things happen in their life, and then all of a sudden, boom, here's mom and dad, and now you got to take some of the money that you would have paid for your kids college, or you would have paid to go buy a new house or better your life or create a legacy for your kids and grandkids. But now you have to take some of those funds and redirect them to take care of your parents. And it's a noble thing for kids who do decide to do that, but I don't want to be that way. I don't want my kids to have to bear that burden. So what I can do about that is just be responsible now and set myself up so that when that time comes, they're not that way. I mean, even if they had to, like, say, hey, come live with us, at least there's finances to support that. Maybe we need to go buy a bigger house, or we need to go do something different with living situations, but at least we have the funds to bring to the table to make that happen, and we're not financially burdening them with us. So we started looking into this thing a few years ago, and the first thing we did was the move to EXP because of the stocks and the revenue share. Those were other streams of income that we could use and are using now to invest and to get ourselves on a path for retirement, and still doing the same things that we would be doing in any other brokerage. Like, our life is real estate. This is what we do. And then EXP brokerage helps us to further our goal of investment. And then I just knew that there was other things that needed to happen. So Corey and I, shoot, how long ago did we meet? Like, well, I think we moved here in 2012. I think I met Corey maybe 2013, maybe 2012,
Yeah, at the
somewhere around
gym.
there. Yeah, we were at the same CrossFit gym, and Corey is. You guys don't know. I'm going to go ahead and introduce Corey now. He is a retired NFL superstar lineman. Played for the Dallas Cowboys. Um, I am. This is put everything in perspective. I'm 5'7", 165 pounds. When I met Corey, he's still the same height. What are you, like, 6'5"?
Well, I'm 6'4". I might have lost a little bit, but
All right, so
6'4",
he shrunk.
285 right now. So
Yeah, 6'4",
yeah,
285. So Corey's not a small dude, right? Um, so we were working out the same gym, and my daughter, like a lot of the kids were intimidated by Corey because of his size, but he's like the nicest person you'd ever meet. But my daughter was not intimidated by him, Aubrey. She was so tiny, and she would growl at him. You remember that?
oh yeah, oh yeah.
She would growl at Corey, and her and Corey took a liking to each other, and she would help him clean up his big old sweat piles after a workout. I think we have a picture of that. Um, so at the time, Corey was still doing the NFL thing, and then he got into finances, and it made sense to me, the transition, because here Corey was working in a professional sport, making good money there, and it made sense that he would be a good steward of his money. And on top of that, Corey also shares the same faith that I share, and we connected on a lot of different things. So when Corey came to me, it was like, "Hey, I'm doing this financial planning thing," and da da da. I knew several financial planners, but I already had that trust with Corey, and we already had that friendship, and I wanted to give him an opportunity to help us, and because I know where his heart is at, and it's just been a perfect partnership because the things that he has done for us in our investment world, outside of what we have with EXP and our investment properties and all that, has just been exceptional. I mean, the professionalism, the honest feedback, the guidance has just been awesome. Um, his availability to help, where we have a CPA that does all of our finances, and there's been several times where we'll get Corey and our CPA on the phone, and they'll hash some things out and then tell us what to do, and we do that, right? So um, it's all about the team, right? It's all about having a team of professionals that are in our best interest and give us solid feedback and solid guidance, and it's been invaluable. And to have that level of trust, right, where I can, like, I mean, this was just recently. It was like a month ago, maybe, Corey, where you and Tatiana got on the phone.
Yeah. Oh yeah. We were on for a little while. I had stopped. We were going to make one move, and I had stopped. Like, hold up, we can't do that. And we both got into it just a little bit, and like some tension, good tension, and we ended up on the phone for an hour and a half researching this one piece, on IRS.gov. The most boring stuff you can imagine. And we're sitting there reaching through this deep tax code trying to figure this stuff out. And we came out with the right move, but we both came out sharp and learned a piece out of it in the meantime. So what I liked about it is this is why Jeremy and I have hit it off quite a bit, not just, we like each other's families, but how you see somebody work and respect comes with it. Well, that respect turns into a relationship a lot of times, but with our faith thrown in as a critical piece, it also keeps this humility level there, where, like, I know I'm a performer. I know I can go out and go perform for myself or my family and go get it. But at the same time, I don't know everything,
Yeah.
and I still make mistakes. And so that's what I liked about that, was Tatiana had the same attitude. You guys got that attitude where you're like, I'm going to go make it happen. But look, it's not like I'm King Tut over the world. I'm very much human like everybody else.
Yeah, and I love that, and you have to have that, right? Side note, that's a requirement for success. Where you have to be able to check the ego at the door, and be open to learning, and know that there's always something that you can learn from everybody. No matter how new or how experienced they are, there's always a learning opportunity in every interaction. So yeah, it's just amazing to know, and very comforting to know that we can trust our money, and for me, that's hard because I grew up very humble without money, and so now I know I can trust my money and my investments to people that care about us, and we care about them. And I mean, we had the friendship with Corey before the business relationship, and then our CPA started with the business relationship, and it's turned into a friendship as well. And funny story with her, I think I don't know if I've told you this, Corey, but when I hired her, I'm in real estate. I negotiate, right? That's just what I do. So she told me what her fees were going to be, and so I try to negotiate. I'm like, well, hey, you know what? And she was like, yeah, we're not the right fit. Best of luck. And she freaking fired me before I ever even got a chance to hire her. And I was like, I don't like the way this is going. I was losing right away, and but I saw the value in her. I had talked to several CPAs. I saw the value in her. I'm like, wait, hold up. Don't get too serious. So I paid her price, and it's been worth every penny. And we laugh about that to this day. She's like, you know what? She had to call people and talk to them and be like, hey, should I work with this client and yada yada. And they're like, well, he is in real estate, and I'm like, yeah, that's what I do. I negotiate. I wouldn't feel right if I didn't give it a shot. But even anyway, side note, all that to say is that the business relationships and the team aspect of this whole thing is just so beneficial. We do that in real estate, and then in finances, and it's super important in our finances because, like I said, going to the back what I was talking about at the beginning, it's all about setting ourselves up for success later on down the road. And that's why I asked Corey to do this webinar and take some of his time and educate you guys. And I'm sure I'm going to learn some stuff too. but just to tell us what is out there, what can we do to make sure that we're setting ourselves up the right way from the get-go, so that we don't have to miss out on opportunities, and we don't have to go back and say, hey, you know what, I wish I would have started this 5 years ago. um, y'all will have an opportunity to ask any questions you have of Corey, and then an opportunity to schedule a meeting with him and talk afterwards if that's something that you would like to do in private. So that being said, Corey, thank you so much for your willingness to get on here and educate us, and go ahead and turn it over to you. Take it away, sir.
Heck yeah. No, I appreciate it. I laugh when you say check the ego at the door, because Monica, one of our coaches at the CrossFit gym we had when I first showed up there, one of the first things she said was check your ego at the door. And she looked right at me when she said it. And I'm sitting here like, I was like, whoa, girl. I'm like, why are you looking at me like that, you know? And she's like, I'm not looking at, I go, you looked right into my eye when you said that. And it was just kind of funny. But I'll get going. I think it's been pretty cool since we've met, and seeing Jeremy and his wife Vanessa and family just take off in an insane way, and especially with EXP too. It's been pretty cool to see that. I'm going to share my screen here, and what I'm going to do, I'm going to give you just a piece of my background. Let me expand this. I'm gonna give you a piece of my background and story, and then we're gonna go into retirement risks, hit on tools just for a second, and then I want to give you guys a tool that I use, a retirement projection software that I use. It's been a really great visual tool for me, and could as I sit here and churn in my head, could be a good potential sales tool for you guys, and you might want to utilize something. You might not need it, but I think it's been really cool. And so it's helped me give confidence to people when they're looking at potential moves, especially when it's come to property or real estate, right? Especially you guys might have this, where I have multiple rental properties, or I just have people that are looking for rental properties, just looking for the new house, and they're not sure what is involved in their budget, or how much they want to be above their budget, or where they're going to be, how it's going to affect their life, what kind of mortgage they're going to have, how are they going to have to navigate this kind of the largest expense that most everybody will deal with in their life, right? And so anyways, I'm going to show that at the end, but give you guys a little bit of background. So I'm from Washington State originally. I'm middle of three boys, come from a blended family. So I got a lot of step siblings and a step parents. And so we went through that whole thing and moved around a ton, and went to the University of Montana, played football, ended up playing 6 years in the NFL. So bottom right picture, you see most of my time was here with the Cowboys. I was here I was practice squad in Detroit in 2005, picked up the last 5 games with Bill Parcells that season. And here in 2006, Wade Phillips came in 2007, 2008, 9, and then Miami in 2010, Dallas cut me, and I went to Miami for that season, and that's where football players go to die. And so that's where I went to, pass away in a respectable manner, I guess, from my football life. And it was a good thing, to be honest, because at the time, I struggled with it. I'm sure some of you guys have gone through transition struggles of your own, but I had to find a new identity. I didn't want to leave football. I still had more left in the tank as far as I was concerned. But I was engaged to my wife, Megan, on here, and you can see right here. And we had, at the time, she would even tell you football was number one over her. And the way I operated in my life, even before we met, I would agree that was totally the case. Well, the last couple of years playing in the league, I've always been this coachable guy, work hard, smart, be where I'm supposed to be when I'm supposed to be there. That's what kept me around. But in my last couple of years, I let the politics get to me a little bit, right? And you guys probably had some of this where you have a little bit of fighting with your boss. You were like, we're disagreeing on things, and so he's not respecting me. And I kind of took this, approach where I'm like, it's him against me type thing, and that's just that's a poisonous place to be. But I went there, and so it wasn't good. And so what happened is we played Chicago on a Thursday night game, and I was starting at center. Second series of the game, I ruptured my patella tendon, split my kneecap in half, and that was the end of my career. And I can see back now where God was like, "You're too much about you. I'm not trying to create a football player anymore. I'm trying to create a husband." And so ended up giving the first 2 years of our marriage together totally without any distraction, but together. She had to take care of me on the couch, and it was kind of funny, but ended up being a massive blessing for us in the long run. And so it changed my priorities. Things started happening in our lives. Tried to come back in the league, tried to make it happen, just didn't. But ultimately finished my degree, and then we kind of come into present day a little bit. We moved back to Texas in 2013 here in Trophy Club. And so it's been an awesome place. So what do I do right now? Top left, Pro Capital Wealth Management. So I am in the financial advisory. I'm an independent advisor. Pro Capital is my DBA and my LLC that I use. And I operate out of the house like a lot of people after last year, right? But I operate out of the house as a solo practitioner. And so I handle a lot of retirement portfolios, some of the insurance portions, life insurance, long-term care, disability, into some alternative investments, but all public securities. And what that means is I have the ability to sign into any of my accounts and I can see what's going on with my money. And so there's some comfort in that for a lot of people, and especially my background in football, where guys have been taken advantage of in big ways. There's comfort in that because it's not like a private investment like my home, right? Where I can't see the way the value fluctuates, or a burger shop where I got to call down, ask the owner or the manager what the heck's going on with my money. So not to say private investments are bad. There's plenty of good things, but this is where a lot of people have been taken advantage of in different ways, especially players, where you take a young guy who's not necessarily exposed to a whole lot, or a young couple, and put them into some places. So there's a lot of comfort in being able to do that. So, but that's Pro Capital's my company. The right side with the camel, his name is Cujo. I also do a lot of speaking engagements just because of my background for football. And honestly, that was a big thing for my faith. When faith became a part of my life, all of a sudden it was like a consumer or a consumption machine. I just ate my life away. And all of a sudden, it was like having an overflowing cup. And we'd be at coffee, and you would be the poor sucker that got whatever information I was eating that day, And so that is so I've done a lot of men's conferences because I've become a lot more convicted in where I'm at in my life, where God's called me to be, and ultimately where we need a whole lot of strong men in this world. We need them to step up in big ways. And so that's been a really big calling. But one of the men's conferences I did in Israel, and that was the camel that was sitting in Israel overlooking Jerusalem. And I want to get a picture with him, and he tried to eat my beard when I was taking that picture. So, and then the best one on here is my family. This is my wife, Megan. She has the heart of gold, but she will also stab you in the jugular if you ever step out of line in some way, right? She's the kind of like let you bleed out under the table, and she'll act embarrassed if I say that, right? But she's got some aggression, and like I know the lady's smirking right now. You tell me like there's not a little bit of crazy in every lady. You want that crazy. I want that little bit of protective crazy in her, okay? But it also keeps me in line. So then we have Grace. She's our 6-year-old. She's awesome. I take her she lifts weights with me in the garage, and I'm glad for that because I need her strong enough, being the first line of defense, to rip the throat out of some dude that tries to rub up on her, And then we have Hank, who's our 17-month-old boy. We named him that on purpose because Hank is a medieval diminutive from John, which is my dad's name, and which means God is gracious. And so there's been a lot of background in us. And so these are big reasons why I stepped into the financial space for several different reasons. One, I got an advisor who did awesome for me when I played in the league. I ended up being a very frugal guy, and I think I started making some of these choices earlier on purpose and even not on purpose, because I came from a blended family. Anybody who's been through divorce knows that has the ability to wreck a financial portfolio in a big way, and it's a tough thing when two people are working together. and all of a sudden we got to split assets or things happen, right? And so it's a hard place to be. And so my dad always said, he goes, I never had a problem making money. It was holding on to it that was the issue. And so like many people, like a lot of people in our society, you know, a lot of people live paycheck to paycheck, don't have $400 in the bank. And so their finances, either literacy is down or we just don't pay attention and swim in our accounts. And so money that's not managed goes away. And so if we manage it and we're able to assign it correctly, we can have a whole lot more control over it. And so, but I came from that, seeing medical bills stack up in our family in big ways. And then obviously coming into the NFL, you know, seeing, you guys heard of athletes that go broke. You might ask the question, why would I listen to a professional athlete about money or financial advising or investment or any category at all when you had this awesome income from football? Well, it's a valid question, but we always hear about these guys that go broke all the time. Well, I wasn't one of those guys. And that was part of my behavior, but part of the behavior that I got around good people that really did awesome things for me. And my advisor was a lady out of Wisconsin. She ended up doing awesome for me. And so 10 years removed from the NFL right now, I'm in a way better place financially than I ever was playing the game. And so I have her to thank a whole lot for it, but I have the ability to walk through that stuff and actually take action in some of those. And so she learned me up as a side effect. And so it's been a really, really good deal. So that's a little bit of my story and my background and why I do. I wanted to make a choice for myself that I didn't want that kind of garbage. I didn't want money to dictate to have a burden over my marriage or have a burden over my family or what we did with our children, to be honest, right? What kind of activities I could get them in. Just signed Grace up for cheerleading because she wanted to do that. Right? But I didn't want that cloud over me. And so because I put it to work, the majority of money I put it to work, ended up performing in an awesome way. And so nobody can predict the market, but it ended up doing awesome things. And it allowed for us to transition even into new business in our marriage and be comfortable. It gave my wife security. And so it ended up being a massive blessing in a big way. And so that's what I do. I do a lot of that stuff. We'll move on here. This is just a little disclosure. What this is this is my branch address. And I told you Pro Capital is my LLC, my DBA. And then I broker dealer out of Woodbury in Minnesota, which only deals with independent advisors. And so that's who, like if you were to work with me, that's what your brokerage statement would say on there is Woodbury. And then the quarterly statements would say Pro Capital. So disclosure on there. And so we'll jump into it here. I want to show you guys, try to run through this pretty quick so we can get some questions at the end. And if you got anything going on, pipe up at any time. This is, there's only a handful of us on here right now. So feel free to interrupt and get conversational in this thing, right? So when you guys are when I'm sitting here looking at somebody's portfolio for retirement, I got to account for different risks and different things that are happening in your life, right? And these aren't all encompassing, but these are 4 major categories that I'm looking at somebody when I'm trying to predict for retirement or trying to project for retirement and trying to anticipate any problems that we're going to run into. You'll see here the 4 of them. I'm going to go over each of them individually just for a moment. Inflation, taxes, longevity, and sequence of returns. And these are all, I'd write those down and see like, okay, what those mean. And maybe you'll take a sentence on each 2 as we go through them. But these are big deals. And so, okay, a lot of you guys are probably familiar with a lot of this, but if you're like me, I need some repetition, right? I need things burned into my brain a little bit. Because the more I know about this for my portfolio, the more I can share with you, a friend or somebody else potentially, to make sure they're making the moves according to their life and watching out for some of these big risk factors that are coming in. Okay, inflation risk. So what inflation is basically the cost of our goods that we're paying for and we're buying as we operate our lives. And so Sim, you might hear about, like, you remember grandma paid for a loaf of bread for a nickel back in the day or something. You might have heard stories like that. And now a loaf of bread costs $5. Well, That's inflation. What it is, it's over time, it costs more and more um, to produce goods, to ship them, to do anything, manufacture them, anything that's involved with getting the product to your table or in front of you has a cost to it, right? And over time, inflation is what that cost is. What happens is that cost gets greater. And what it means to you specifically is it means it diminishes the power of your dollar. It diminishes the ability. It's called purchasing power. It diminishes the purchasing power of your money. And so, like, and I'm going to use this example right here. So you'll see right here, this 100 grand up in this top left corner. So let's say you just got 100 grand sitting in cash in the bank. Well, if I left that 100 grand sitting for 30 years, and I physically, I see this with my eyes, that 100 grand never moves. Well, the value of that money never diminished at all, right? I just left it sitting still that whole time. Well, the value, you're right, the value of the money didn't move, but because inflation has taken place, the capability or the power of that money has diminished. And so that 100 grand does not buy in 30 years what 100 grand buys today. And so what happens is traditionally inflation has been at 3% on average. Right now it's about 1.5%. And then with all the stimulus bills, all the spending that's going on with the current government, it's predicted to go up even more, and we'll feel it in some fashion, I'm sure. But historical at 3%, if you had 100 grand and you just left it in cash, that 100 grand over a 30-year period turns into 40,000 worth of buying power. So that diminishes really fast. And even in a 10-year period, you see 100 grand goes about 73,000, just under 74,000 in buying power now. So you see, we start losing the value or the ability to buy more or buy the same amount with our money as we had in the past. And so this is a big factor. Why is it a big factor? Well, if I'm going to retire, I'm talking about spending 20, 30 plus years in retirement and relaxing with my babe and doing our thing. Well, inflation is the silent killer of our money. It eats at it. So the purpose of investment and planning for retirement is that one of the number one purposes of investing at all is to try to stay with or beat inflation somehow. And so it means I got to keep my money at the value so it can still produce what I need it to produce. So that's inflation. That's number one. Number two is tax. We got a few different types of tax. This is just a few of them right here. We got lots of others, right? But here, ordinary income, that's the marginal, or that's the progressive system that we use, right? The more money you make, the higher the bracket you go into, the better you perform, the higher the bracket you get into, the more taxes ultimately you pay off in your income, in your federal income anyways. Capital gains, this is talking about investment specifically, and then estate taxes and inheritance. All of these are subject to change. There was big overhaul with the Tax Cuts and Jobs Act down to the lowest levels we've been in a long time. And then we have proposals, you guys I'm sure have been watching proposals with the new administration of increasing those rates at different places. And so estate tax has become a big deal right now because with our current baby boomer situation, we have 10,000 baby boomers retiring a day. And so, and right now, over 70% of our nation's wealth is held with baby boomers. And so what's happening in the next 20 plus years, as baby boomers pass away, there's a huge pass off of inheritance onto their beneficiaries. And this estate tax has become a big deal. So we gotta start protecting, we gotta protect the pass off, and we gotta maximize how much you wanna leave to your heirs if that's what you wanna do, with paying as little tax as possible. That's where a part of my job comes in. It's like, oh my gosh, we're talking about the estate tax exemption coming way down and the estate tax rate going up. Well, it affects a whole lot more people, and I'm like, I gotta protect you or protect my family to make sure I'm passing off as much as my estate as possible to who I want to pass off. So these are some things, big things right there. Inflation and taxes together. So what if I'm investing, and let's just say this is stocks, bonds, and cash. And so this isn't through 2020, this is only through 2011, these numbers. The average return on the S&P 500 is currently 10.3. Through 2011, it was 9.8. And so If we include inflation and taxes into these, you'll see stocks gross at 9.8 after inflation turns into 6.6. After taxes and inflation turns to 4.6. So it can really diminish our returns, right? And so you see bonds, which traditionally have earned less, they're a little safer investment, even more. And then cash, you can see, all right, we could have even a 3+% return on some sort of cash investment. After inflation, diminishes to almost nothing. You guys might have some savings account that might produce like a 0.4% return right now, a high yield savings or something. And you see after taxes, you actually have a negative return. And so these are some things that really start affecting what's going on with our money if we're projecting for retirement. So the third one is sequence of returns risk. All that means is poor timing or bad timing. And so I'll show you, I'm going to show you the same slide here in a second, but I have two portfolios here I'm looking at. So like I got two people right now. I got one blue person's money and I got red person's money here. And so what I did is say I got 100 grand, whatever amount you want to put in, and I'm placing it in the market and I'm letting it cook for 25 years. So you see this bottom number, it goes up 25 years. So I'm letting this baby cook for 25 years. Excuse me. What I did was front loaded all the positive on the blue line, front loaded all the positive returns on the market in the beginning, and then back loaded all the negative returns on the back end. Okay. And I flip-flopped that for the other person for this red line. And so what I did is front loaded all the negative returns on the front end, and I back loaded all the positive returns on the back end. And so what you see is, okay, if I just put my money in there to cook and I let that sit for 25 years, if I flip-flop that, you might have a great return the first year, I might have a horrible return the first year. But if we had those mirror images and just flopped them, we would end in the same place. And so not a big deal, right? If I end up in the same place you end up, awesome, we're both winning. And that's a great thing. Here's where it turns into a problem. Sequence of returns means poor timing. If I decide to retire and I start taking money out of my accounts, that's a negative on my accounts, right? Well, what happens if the market turns bad at the same time? Now we have a double negative hitting our account. Well, now you see the blue line, this guy had all front loaded positive returns, and he's been taking money out that whole time, and he still ends up after that 25-year period with money left over. You see this bottom person, the exact same person, just a mirrored return, the opposite flip-flop mirror. He had negative returns front loaded and was taking money out of his account. He ran out of money in year 12. So that's where things can happen. You're like, well, what if we hit another financial crisis? What if we hit another downtime this last February, March, when the shutdown happened, the market tanked 30%. Shoot, if I got $1 million in the market, that goes to 700 grand really quick. Well, if I'm taking 4%, I'm just throwing numbers out. If I'm taking 4% out of my accounts, that's 40 grand a year that I'm taking as income for retirement, right? Well, that 40 grand turns into a different story all of a sudden when my account plunges down to 700, and I still want to take that 40 grand out. Well, that 4% is different, and I'm really hurting my account potentially. So that's where this is another big risk that we got to watch out for, a sequence of returns risk. And the last one, the fourth major one, is longevity. We are living longer than we ever have before. Medical advances like crazy, some great things, right? But the issue it has with it, same reason our Social Security has a heavy burden on it, is because initially when that was created, it wasn't created for the longevity that we have people living to right now. And so we have people living for a long time. The average life expectancy is mid-80s. Women live a little longer than men and live a little less dangerous lives. That's why they pay higher premiums, or men pay higher premiums on their life insurance typically. But if the average life expectancy is mid-80s, that means half of our nation is living past that point. And so you got people living in the 90s and 100s. Man, I gotta protect, or I got to make sure that people are not going to run out of money or outlive their money. I need the money to outlive them. And so this is a big one right here. And so I'm going to move down. And so what I'll do is I'll try to match these up. And here's some tools that we might use. But I'll try to match these up. And so you're like, okay, you're like, well, how do we do that? And you guys know some of these all right. And we can look at some different, there's lots of different investment things you can go into. And right now you guys are in real estate. So you guys know I could build rental properties up, have multiple properties where I have cash flow and income streams coming in. I could put into my brokerage accounts or retirement accounts. So that might be a 401k at a job, might be a traditional IRA, a Roth IRA, depending on income limits, a SEP IRA. SEP and solo 401k are great tools for entrepreneurs. So like you guys are paid 1099 through your brokers, right? Most of you are?
Yep.
As independent contractors? Okay.
Yes, sir.
And so since that's the case, you are your own entrepreneur. This is a big deal. So you operate your own company. And so you can start a SEP IRA, a traditional and a Roth IRA. There's income limits and there's a max that you can put in there of $6,000 a year right now. $7,000 if you're 50 and over for catch-up provision. But a SEP IRA, if I'm both the employee and the employer of my company, or I have a husband and wife, and there's some different. This might not be for everybody, but for some people, it might work. But if I'm the employee and the employer, well, if I'm acting as employer, I can put up to 25% of my net take home in a given year into my retirement account and defer that income, cut my tax liability for the year, defer that income for retirement. But I can put 25% of my net or $57,000 max in that. So what that means is, let's say if I made 100 grand this year, net on my take home, I took that home as my income, I could put 25 grand into my SEP and cut that off my taxable income for the year. Now we got to have a CPA to calculate all this specifically, but it ends up being, that's a big chunk of money that I can defer long-term, cut down my tax liability right now, especially if we're looking at going into a tax increase with what's proposed right now with the new administration. And so these are some good tools to start looking at and say, hey, would this work for me? And so others on here, you're a traditional retail brokerage account. This is just traditional investment account. And there's lots of others. And so when I start looking is I'm trying to take these risks and I start pairing these income streams together, income and expenses. And so I'll start dropping them in these buckets. And so I got 3 buckets here. There's first one is this probable lifetime income. That's anything that falls in cash, bonds, CDs, stuff that is liquid immediately right now, right? And the middle one is protected income. This is anything that's guaranteed. That might be, I see it on the side here, Social Security, stable real estate. So if I got a bunch of rental properties that I got good cash flow coming in from my tenants, this is good, right? That's reliable income, or income annuities, stuff like that. It'll be like a variable annuity with an income rider or something like that. And then on this top, these bottom 2 buckets are what I need in retirement to make sure I stay retired. That once I cross that veil, that threshold, I don't have to go back to Walmart and shake hands. I don't want to have to do that, right? If you guys want to, that's your prerogative. But if I choose to cross that veil, I'm going to the beach with my wife, and I want to stare at her at the bikini. That's what I want. And so I don't want to have to go back and work if I don't want to. But these bottom 2 buckets need to be taken care of in order to do that. And then this top bucket, this growth bucket, that's all, you'll see this right side, that's all legacy. That's vacation time in retirement. That's my beneficiary. I want to leave legacy to my babies. How about you guys? But I want to leave an inheritance to my grandchildren, my children's children. I think it would be awesome, not just to leave a financial inheritance, but to leave the know-how on how to operate that. That's what I want to leave for my babies in a big way. If I can build up an awesome empire in my life, I can pass that off to my babies, and they know how to operate that without torpedoing it into the ground. That would be such a huge, because they could just continue to build it. I was at the Cowboys facility not too long ago, and I ran into one of the Joneses' grandkids. I remember him playing around in the locker room when we were in training camp as a kid, and now he's bouncing around from different portions of the facility, learning all the different arms of the business. And I asked him, I was like, are they grooming you right now to take this over one day? And he just kind of nodded and smirked. And I thought, man, this is the coolest thing in the world. Like, how cool would it be? And not to say that they're going to want to get in the financial industry, but how cool would it be is to sit here and take your baby, your child through something like that, so they know how to steward it and to grow it in the right fashion. And all of a sudden you have a generational wealth going on, and that's how you end up with like Jones family type people, where like might have a first time millionaire in the family, but they taught theirs, and then they taught theirs, and they taught theirs, and they just kept growing that name. And like, like that kind of dreaming vision is amazing to me, and I love it. And so anyway, this is what I start looking at. I want to pair those expenses and those income streams together, make sure we got the need, and let's see if we can even shoot above that after we have the need taken care of. And so I'll go into an example here. And so I'll pair these things and I'll jump in. This is the sales tool I was kind of talking about a little bit ago. I'll jump into a projection. And so in my software that I use, I punch in everybody's assets. So if you have retirement accounts, you got cash in the bank, you have real estate, you got whatever it is, I'll sit here and, okay, I'll everything that you're doing right now, I'll put it all under one umbrella, and I'll run this projection based on your goals and what you want in retirement, income need, whatever it is. And I say, okay, is that money going to last? Let's see where you're at today. Before I can make any recommendation or you make any moves, let's understand where we stand today before where we try to get tomorrow, right? And so, so what I'll do here, this is from clients that I have. I had a husband, wife, husband was 61, wife 53, and she was at home doing a little jewelry business, getting a little bit of income off of that, and he's still working. He had a 20-year career at GE, so he had an awesome pension. There's not a lot of pensions anymore. Less than 4% of the companies offer less than 4% of Fortune 500 companies offer pensions anymore, so they're getting a whole lot more rare. And so, but this guy had it. And so you'll see all this blue, this light blue at the bottom here is all guaranteed money. And so this yellow line you kind of just barely see on the side, that's our goal for guaranteed money. So if I said, hey, I want 100 grand in retirement, but I need 70 of that to be guaranteed. That's what I need in order to stay retired. The rest is just play money. That's what that yellow line would be. That would be the goal. And then this black line is where we actually are. So because he had an awesome pension, he was already sitting in a pretty great place. And so, but you see these folks, they're running out. Now this projects totally different for all kinds of people. But you see them running out of money about 91 years old. Well, if I'm trying to project for these people, I can't. If best I can, I need to project into death and not before it, right? And so this second picture is just the same. It's just the same, but a different illustration showing how their money runs out. You see this is his guaranteed income, his Social Security and pension, how it kind of flattens out here into his passing. But this is how it runs out. And so what I do is we'll have lots of conversations. So we'll come into, I'll come into a client conversation. I'll be, okay, and I'll get your history on where you've been with investments, with your retirement, with advisors, what your flavor's been, or where you want to go, current assets that you have. And I'm like, can we go make this better? Right? Can we change this somehow to make it so it's not going to be okay? And so in this conversation, now, it might be fully like, hey, Corey, what should I do? Or it might be, I've had a lot of these conversations like, man, I'm thinking about getting into real estate and getting this condo or getting this duplex. Do you think that would be the right move? I've always had an interest in that. And I go, well, all right, give me the cash flow, give me the principal down, give me the mortgage that you're going to have on the property. And we'll punch all of this stuff in and see if it affects the projection. And what I think this could be as a tool for you guys is exactly that. So if I got it, and you might not need it, but I was talking with Jeremy. I was like, how many of your people do you talk with an advisor or talk about their projections before making an emotional buy on a house? Right? You guys know that, right? I always go above budget. I was shooting for a $300,000 house, but ended up buying a $400,000 house. A lot more mortgage than I anticipated, but we did it. And so, okay, not awful, but how could I give somebody a whole lot more confidence in that situation to be able to make that and not have the buyer's remorse on the other end, right? I don't want that. I don't want that for you guys at all. I want to make sure you're as confident as possible and you're excited to have whatever your kind of life you're living. And so I go back and we might have this whole conversation to see how we can change it, right? And so this is what it ends up looking. This couple basically did that. They sold their current house, bought a new house on a whim that was bigger than their current one. Amazing, over in Atlanta, Georgia. This is where these guys live. But what we did in their financial portfolio here was I took over all their brokerage accounts, so the traditional IRAs, the Roth, and their retail account. And then they had two other fixed annuities that were part of a really conservative piece. And so I said, well, all right, I have this other financial product, a variable annuity with an income rider on there, where I knew I could beat that out the gate, at least at the protected level. And so we changed the projection, or I just said, hey, if we move this to here, and we get, and I compare performance apples to apples, is it going to change anything? And so we ended up moving a quarter of his 401k, and then we started moving over these other fixed income annuities he had, and it ended up changing the projection in a totally different way. Right. So this is a big deal. And so what was neat about it was I got to come back to these guys at the beginning of this year and during their 2020 review. And so I'm doing Zoom call with the husband and wife, and I say, okay, we go over all their performance on last year and how we did. And then I update all these numbers into their projections. And we ended up outperforming in a big way. So like their fixed income annuities had a 4.59% return on last year. Well, their variable annuities with the income riders had a 33% return income. Well, I can't guarantee any return, but I want the bigger number, you know. So if I can do it, I want that. And so it was really neat because, you know, we changed the numbers in it, and it lights up the screen in a big way. And so it gives us a lot of good. Then I share with people, say, okay, you might ask, you might still be playing the pessimist. Hey, that looks all good, but how do I know that's real? And so what I'll do is I'll run a computer simulation. It's called the Monte Carlo simulation on it, if you've ever heard of that. But all it does, computer tries to anticipate any problems, and it determines our probability of success or any relative error. And so on that same plan for these folks, we said, okay, if you stayed where you were at, current net worth, your current picture, this side right here, if you stay where you're at, we have kind of a worst case scenario, things go bad, a typical results, or a best case scenario. And you see how all three of these lines trend down here, right? And this worst case scenario kind of running out of money. Well, now, and we have a 40.83% chance or relative error. Man, there's a lot of errors still left in that. That doesn't give me a whole lot of confidence. And sometimes that just takes dumping money in the buckets, right? But for somebody who's a little closer to retirement, they have some assets to manage. You know, I want a little more certainty there. And so what we did was we, just by those few moves, we see how this projects in a totally different way now. And we've cut down relative error under 20%. So I have over 80% probability of success that this is going through. And this actually is from a few years ago, or 2 years ago, and I've updated their numbers for. So now the relative error has come further down. And so since updating those numbers. And so that's been really cool. But this is where I think it'd be neat for you guys is, like, say you got somebody who's unsure, or you're in the pre-planning process for somebody. Hey, I'm going to be looking for a house like this. And you're like, okay, is that what's in your budget? You know that? Are you confident that's where you want to be? And you might hear the husband and wife like, well, I don't know if we want that much or this, whatever. Okay, have you guys talked with somebody to give confidence into your choice that you're trying to make right now? Well, no. Well, this is where I think might be valuable to you guys, where, hey, put your life on a projection and make sure you're not overshooting, because I don't want anybody to end up being house poor, right? I don't want that. So you're struggling to pay your mortgage. I don't ever want that. So this might be a confidence builder. So I put this liability note, and I know we're stretching it. We'll give some Q&A here for you guys. I put this liability note at the bottom right here. I did an estate management webinar yesterday. You guys are dealing with a lot of rental properties and toys, people, awesome stuff, right? Come to great places. And so when this will happen, it's typically when I'm talking to somebody, I go, okay, you got rental properties? Yeah, I got rental properties. I'll ask them, you mind me asking, how you're holding those? How are those titled? And you'll be blown away how many people they'll be like, well, it's in my name, and or it's in my wife's name, or it's in jointly in our name, or whatever, Bob's name. And I go, okay, well, I wouldn't do that. I wouldn't want that if I were you. And it always comes as like, well, what are you talking about? I go, well, if I have a rental property and I hold it in my name, and whoever my tenants in there or my renters are in there, they have a party and somebody falls and breaks their leg and decides to sue somebody, guess who's liable? I am. And it exposes not just me, exposes my family, my home, any sort of cash in the bank or investments or retirement accounts, exposes my entire life. And so that's part of an estate planning deal, but I know you guys deal with a lot of that. And so usually also they're like, well, what do we do? And I go, well, that's part of what I do in my estate managing process is we fix that. And so that's when we get into a bigger conversation of working together and say like, okay, well, let's arrange a meeting. We go over your assets. And then we really start solving those problems and I promise a lot more problems start coming out, but we start solving those problems and making sure that liability, that exposure isn't there in a big way, because I don't want you're trying to do good things. And a lot of people just don't know what they don't know. And so I don't want people that we're lawsuit happy in this country. Right. And so I don't want you guys or any of your clients or anybody or friends like that fallen victim to an issue like that where you just happen to be vulnerable in an area where you shouldn't be vulnerable. So I wanted to put that in there. But I'm going to stop sharing right now because I know I took a long time, but I want to open it up to any questions. Anything you guys might have for me. I'm also available after this too, right? I'll give
Hey,
lots
Corey,
of stuff, but you guys go ahead.
I got a quick one. Are you able to pull up, just so we can relate this like real world, are you able to pull up my stuff and just kind of maybe tell them what the performance is that you've gotten for me?
Pull up your accounts.
Yeah.
I mean, I can. That I wasn't anticipating that, but if you want me to, I mean, I
I
can show them
know.
that.
Well, yeah. I mean, it's a small group, and I'm totally okay with that. If you want to show them like what you have done, like I want them to understand like real world. I know we just went over hypothetical scenarios, but I think it would be helpful for them to see real world what the what the growth that you've got for us. And I don't know if you need to show like the whole thing, but you can.
Yeah, I'm that's I'm okay with you sharing that. I'm not okay sharing that. So like if you're
Okay.
okay, I'll let you share that.
All right. All right. All
um,
right. Well, so I don't know the numbers. It's totally on spot. I just kind of came up with that idea. But I think the last time I checked, it was like 33% or 34% growth in our accounts. And they're big numbers, right? They're, at least for me, they're really big numbers. But what I can share with you guys, I pulled it up. Um, and this is outside of what Corey's doing, but two of y'all are with, or one of you are with EXP. Monet, you're coming on board. And I want to share you guys. Oh, can you enable screen sharing, Corey?
oh
I want
yeah,
to
sure.
show you guys what, because he mentioned earlier about company 401ks and stuff like that. Now in real estate, nobody has that, right? But EXP has the stock program that equals almost a 401k, right? So here is my Broadridge account. Now, EXP doesn't deliver Broadridge anymore, or doesn't have Broadridge anymore. We have ShareWorks. So I'm going to show you ShareWorks as well. And you can see right now what my portfolio here is. I believe this is ShareWorks. So my portfolio with EXP stock in ShareWorks is $317,794. Two things to consider: we have an available balance, and then we have an unavailable. Unavailable balance means that these shares have been given to me by EXP for my production, but they have not vested yet. There's a 3-year vesting period. So if you look, this $136,000, this includes shares that have vested plus what I have purchased. It just changed on me here. Um, Shares that I have purchased plus what they've given me, and then down here is what they've given me that has not vested yet. So um, you see, shares I have purchased totals $112,000. Doesn't mean I've spent $112,000, right? These shares have just increased over time. Here's the agent equity program. That's how much I have vested that I can access. And then here's shares that I issued that were issued from sponsoring agents and stuff like that. And then here's shares that have not vested yet. That's more of a breakdown. And then if I go into my um, Broadridge account, this is what I have available to me right now from shares that I have been given from EXP that have vested. You can see I took out last year this amount of money. That was my investment. As of December of 2020, this is about what I had invested in the company, buying stock through my transactions or my commissions at a 10% discount. 5% of your commissions can go to stock at a 10% discount. That's what I took out. This is what I still have. This is all money that is mine. And often I get the question of, or I get when we talk about EXP with people from other brokers, they say, yeah, my brokerage is cheaper or this or that, and I'm like, there's no way your brokerage is cheaper because it doesn't matter what I pay. Look at what I've made, right? We have to consider that. So all of that to say, if we're focusing on retirement and we're having a portfolio that is vast, not just in one spot, like I can't have all of this in EXP, right? Because what happens if something happens in EXP tanks? Like I need Corey to be doing stuff for me on the other end. I need to be doing stuff for myself when it comes to investment portfolio, right? And so we bought two more investment properties this year. That investment portfolio is growing. So it's a trying to have that 7 levels of income, right? That's 7 income sources. That's most of it's passive at this point, so that we can really build that wealth and that generational wealth. So that's all I had. I wanted to share that with you guys. But does anybody else have any comments or questions for Corey at all?
Yeah, I definitely we're searching and looking for someone right now. Um, I haven't even had a transaction in real estate yet. And I've got about 10 years, um, just came off raising children, uh, that I'm looking to put in my whole income. Uh, and Jeremy, it's going to be good, right? Um,
Yeah, of course.
um, is going to go into our into investments. So we want to talk to somebody. We have one other person that we are talking to right now, but I definitely want to talk to you more about our personal situation and what.
Heck yeah. I'll well, your email, I believe you registered, right? So I
Yes.
have your email.
Mhm.
I'll give you a shout after this. I have another call after this, but I'll give you a shout today. And if your time, or you can shoot me an email, or I'll shoot you an email, and we'll set up a time
I
just to
probably
visit
studied
one on
time.
one.
Yeah, I want my
Okay.
husband to be there too. So today, when I was hoping he could be here for this, just the dogs today. But so yeah, we would love to talk to you.
Awesome. James 1A, you guys good?
Yeah, so far so good. It was a lot of, helpful information. So I really do appreciate you taking your time to speak to us. And for me, it's just been an honor just to be able to learn and just grow.
Sharpen up. I love this for you guys because the sharper you are, opportunity favors those who are prepared, right? And like the more you got, the more you eat, and the more you're prepared, more experience you walk through, the better you can speak to anybody you're talking to, right? And so, man, if I look at you and as somebody who's just, my neighbor called or texted me at 6 a.m. in the morning about selling his house and needing a realtor. And I thought of one guy because I knew he was going to be up. But I thought, I know this guy attacks the world. But I was up in my office right here at 6 a.m. I always get up at 5 and get some work done and some reading. And 6 a.m. I called him, and he had just finished his workout. He's like, "What's up, man? What do you need?" I'm like, "I'm going to make an introduction." And they just sold, and we got the new people moving in right now. And I need them to come back, or Jeremy, you need to come mow their lawn because it's getting out of control. But but I'm like, that's it's because we work together. I mean, he knows what's going on with his stuff. His Vanessa, his wife, is amazing. She's involved, and so they are continually sharpening their swords. And like, the more you guys get, the more people look at you that way. And I want to work with those people. Those are overcomers. Those are people that are not going back to where they've been, and I want people like that in my life. So
For sure. And the
keep
important
going.
part is the team. It
Right.
team together, everyone achieves more, and we know that in life, like, we can only get so far on our own. We can only know so much of everything, right? Or we can specialize in one thing, and then we can have people in our corner that are experts in other things, right? And I prefer it that way because that takes so much pressure off of me and enables me to go and really live in and develop my gifts, right? Where I don't have gifts everywhere. I only have certain gifts that were granted to me by my maker. And it's important to me to develop those gifts and go out and use them, and then find the people that have gifts in the other areas where I don't, and so that's part of, I mean, we even embody that when you look at um, our brokerage, and when you look at Team Legacy, and Team Legacy is, Corey, you don't know about Team Legacy, but it's our revenue share group, right? It's a group of agents that are all over the country, and we're on a Facebook group together, and we have an expansion manager, Sydney, and we have like people that are excellent at all these different areas, but we all collaborate on a daily basis, and it's super helpful. And then our team, on a smaller level, our team here locally, the Smith team, where we're doing big things, and we have experts in different situations, but we always partner with people like, we've got roofers, we have home inspectors, we have lenders that are excellent at what they do. And then for our personal stuff, we have Tatiana. We just have people in the right places, and that's what it's all about. It's building those relationships, creating that epic team that's going to get you to wherever you need to be. And understanding where you want to go, that's important too. Understanding what your goals are and having clarity on that will help you be able to put this team together. But as you're searching for what it is you want out of life, it's important to find those people. They're there. you know they're put on this earth, they have these gifts, and they're here to, those, in my opinion, those that are here, that know their gifts and are here to develop them and give back. Those are the people that I want to connect with. And the connection with Corey has just been organic, and same thing with a lot of you guys. Monet, I think you and I hit it off right away, when we started talking. And same thing with Lisa. We met with her and her husband, and the connection was there. It's all about building these teams up. The more we can pour into each other, the better off we all are. We can all win at this thing. And it just takes the support and the willingness to help. So amazing. James, did you have anything for Corey at all?
No, I like the graphs though, where they show where it didn't matter if it started out good or bad, that they kind of ended up the same, that long term.
Yeah.
So I like visuals where you can see things like that.
Yeah. I liked it too, because, you hear a lot of people doing the panic selling, right?
Mm-hmm.
Where stocks start to tank, and they're like, oh my God, sell, sell, sell. And they get out, and then those things came back. And I have a perfect example for this. So you guys know about like Bitcoin and Litecoin and all that stuff. So years ago, I bought into Litecoin because I sure couldn't afford Bitcoin. So I bought into Litecoin. I think I spent like $5,000, bought into it, and it tanked. I mean, literally, I lost just about all of it. I think I had like $1,000 left in that account. And I was like, damn, that sucks, but I didn't sell it. I held on to it, hoping that one day it would come back. Well, it has made a comeback. Thank God I kept it. I'm gonna log in and see what and one thing you guys will know about me is I'm completely transparent. Like, I will always keep it. Oh, damn. I will always keep it real. Litecoin is apparently doing very well. Am I $5,000 investment is now $10,221. Maybe time to sell that stuff.
I had a client meeting yesterday with a new prospect, and they had over 300 grand in crypto.
Yeah.
And I'm like, that was all the investments they had. And I looked at his wife. I go, "Are you comfortable with that?" And she goes, "Nope."
Yeah.
I go, "Yeah, you better harvest some of those wins and take it now."
Yeah. Diversify, diversify and make sure that if one area has a downturn, that the other areas are still, possibly not affected by whatever downturn it is that you're having. And Corey, man, can't thank you enough, bro. Totally respect you, totally appreciate you, trust you wholeheartedly. If not, I wouldn't expose my folks to you. So hopefully next time we can get more people on here that need the help, because nothing but good things to come from it. Definitely encourage y'all to seek out some guidance from somebody, if not preferably Corey, because I know he's good and I trust him completely. So
Awesome.
that's all I got. I know we're running behind, so if
We're
nobody
good,
else,
man.
Thank
Yeah,
you.
I gotta bounce here. So if you guys are okay closing, I gotta
yeah.
get
Let's close it out. And
Yeah.
what's the best way for them to get a hold of you, Corey, if they want to?
Can you guys see that screenshot that I put in the chat box at all?
No, I couldn't see it. It just said your contact, but it didn't show anything.
Of course it doesn't.
It just says Corey info.
Here, I got it.
So what? X.com.
Here, I got it. There.
Oh, there you go.
Go ahead and take a photo
Okay,
of it.
great.
Yeah, take a snapshot of that, and I'll also email this video out to everybody. So we got that. So you'll have a copy of it. So if you want to go back over anything again, but that in that email you should have an email for registering on the course anyways. But you'll get a copy of this and just a thank you for me. And if you guys want to, I'll probably email you separately, just say thank you again. And if you guys need anything separately, you think after this, let's talk. So appreciate it.
Sweet. All right, y'all. You guys have a great day. Have a good weekend.